Today, what we're going to do is we're going to go and have a look at my favorite candlestick pattern. Now, I'm sure everybody's got some kind of favorite pattern. This one's mine. So I'm going to explain that in a little bit more detail. So far, what we've looked at is how to interpret a candle, how to understand what a candle shows you. I'm looking particularly at individual candles. Now, what most traders are actually doing is looking at the pattern, the sequence of candles over a period of time. And it's these patterns that give you the kind of progression story of what the market's doing. So it's patterns that really matter. And these are then going to be combined with other things, footprints, profiles, price adders, in order to be able to execute a trade. If you want to see a bit more on that, click the link, come and join one of our webinars. But what we're going to focus on today is a candlestick pattern, but then also the reality of trading these types of things. Because the easy thing is always to say, look, here's a pattern. When you see this, do this, market does that. But what actually happens? How exactly do you trade it? And also, how do you know that this one's worth trading against a different one? So let's get on to it. What's my favorite candlestick pattern? I could give you a double top, head and shoulders, any manner of different patterns, wedges, pennants, any of these. But my personal favorite is a flag, but it has to be used in the right context. I've talked about context multiple times in this series. Context is what matters, because you will get a flag just like this one. Looks wonderful. Technically, that's a nice flag, but some work, some don't. So what changes? Why do some flags work and some don't? Where do some flags have the greatest amount of value? So let's get into what are you doing with a flag. Let's go and take a little look at this flag. So what we've got here is a move higher in oil from around about 87.45 up to 87.20 there or thereabouts. We then have this consolidation phase. Now this pullback phase, which is what creates the flag, is a natural pause. Markets have to pause on a progression high. You can't just continually move higher. Think about it like running a long distance. You run quickly. If you take a break, you build the energy up to then run the next leg of the distance. And that's what's happening within a flag. So there's a logical kind of reason why this happens. So what we've got here then is a situation where oil has run up around about 80 ticks, and you then start to get this pullback, which you can draw a trend across. Nice and simple then. The way that you take this trade on is you buy it when the market breaks that trend. So as we trade above the trend, you buy. You then also, and if you're going to measure the target, you take the length of the pole, so from the lows down at 87.40, 45 towards the highs at 88.20. You add that on to the break point. So effectively, your target on this trade is around about 88.80, being the break point at $88 plus the 80 of the size of the pole, there or thereabouts. So this all seems reasonably simple. You buy the break. Where does your risk go? Well, the place that you put your risk or your stop on this trade is below that recent low, so below 87.85. So you're then taking a trade on which has around about a 15, 18 tick risk, and you're looking for around about an 80 tick profit. So about 5 to 1 roughly. All seems great, but not every flag works. So what do you do about that? How do you know that this one's worth playing? Why do you want to play this one? Why do I like flags in certain contexts? Well, it's all about context. It's all about what this leads to. This is a 5-minute flag, but what makes this flag so exciting, what makes this flag so necessary to trade is what's going on around it. So if we now move on and look at the flag, there's your flag on the left on a 5-minute, but you look at where we are on an hourly chart. This is the bit that matters, because on an hourly chart, we are now on the back of a trend move higher, sitting in a flat topped wedge. So we won't get into exactly a flat topped wedge, but the basic idea here is if we break to the upside, so if we can get over the recent highs at 88.18, which is the high that has then been hit on the creation of this flag. If we can get over those highs, you've then got a lot of scope towards the upside. So what this does is it means that this is no longer just a simple 5-minute flag. This is a flag that breaks an hourly situation as well. It breaks an hourly pattern, which then sets up a much greater continuation. You're looking at a daily, and so this was around about the 12th, or this was on the 12th of September. Looking at a daily, the scope of this is to move to approximately $93. So there's around about a 500 tick move in this. Granted, it's not going to do that straight off this flag, but you've got a situation where the market's got huge scope towards the upside. That's what makes this attractive. So whenever you're looking to try and take on a trade using a certain candlestick pattern, you need to look at, well, what's the scope of this? What does this candlestick pattern lead to? And this is why I love a flag, because either a flag can be used before the break of a wider structure to allow you to be in as the move progresses, or alternatively, it can be used after the break and used then to play a continuation of that wider structure. So it allows you to execute trades. It allows you to be part of bigger moves, either before the move begins or after the move has started. So you've always got that scope to be in the trade. So let's go and have a look at what exactly happens. When the flag breaks, your goal is then to buy. So it breaks at around about 88.80, and we do then progress. It breaks at around about $88, and then we do progress all the way to 88.80 over the course of the next hour or so. This looks wonderful. And I could stop there and go, yep, you just buy the flag and it goes. Wonderful. You're going to make a load of money. Everybody's going to be very happy. The difficulty is, and this is the bit that most people don't focus on when they learn candlestick patterns. What they do is they see that and they go, right, I'm going to buy it. And as you can see from that 5-minute chart, 20 minutes later, you're back at a scratch. This is where people then panic, or they start thinking, maybe this isn't a flag. Maybe this isn't what I thought it was going to be. Maybe it won't work. And the reason that that happened is because you've not yet broken the top of the pole. Once you break the top of the pole, then the market accelerates. That's the bit where you are completely confirmed on this trade. Up to that point, there is still uncertainty. For some people, they're going to be looking at this thinking it's a double top. It could trade back to that pole high, double top and fall. So what you have to do is sit through that period where the market works out what exactly it wants to do before it actually goes. Once it accelerates through the high, you know the trade's good. You know you can now be very, very confident of the move towards 88.80. You can add on to the trade. So that's the way that you've got to try and think about these. If we go and look at this on an even shorter time frame, we get this down onto a 1 minute, I'll illustrate exactly what I mean. There you have that same flag drawn on a 1 minute. One thing that you often get with a flag as well is after the break, you pull back to the trend. You can see that. We get that perfect pullback, which allows you then to buy as the market retests the trend. You can get long or you can add on to your trade there. This is not the point to get out. This is the point to see it as, well, if it doesn't break the trend when it retests it, you're in a great position. This is going to go. At this point then, it's about getting into the trade, and your potential to add on is when you see this acceleration, this bigger, higher volume green candle. Once that pops through the high, this is where you can add on to the trade. And we always talk about, can you leverage a position up? This is exactly where you can leverage it up. You can add on, and then you can be confident this is going to run. And you can carry it all the way towards 88.80. What we're going to look at in the next video is how exactly you trade that. The practicalities of actually executing, and ultimately executing on a price ladder, seeing the flow coming in is what really matters. So we're going to go and have a look at that next. In the meantime, click subscribe, click on the notifications, and also come join the webinar. I'll see you next time.